In this video, guys, let's look at direct-to-consumer stocks. This is a new trend that could potentially take off. Stay tuned. Hey guys, warm welcome to you. Right, so one for you swing traders, maybe longer term players. Now, there's a big trend that's starting to happen called direct to consumer. And if you listen to any kind of startup podcast or you're involved in that startup world, I'd like to kind of keep my finger on the pulse of what's happening and some of the IPOs that are coming through. Obviously, there's a big trend of moving direct to consumer. So rather than someone creating a product or a business creating a product and then sticking it in a retailer, now because of technology and because of the internet and all the kind of improvements that we've had elsewhere, there's a direct to consumer aspect. So people can market the product directly via Facebook ads, via Google ads, etc., and then fulfill the product directly from their own inventory via their own website. No middleman. Of course, that means better margins. There are pros and cons with it. This is something that's kind of getting traction. So I've started to create a watch list of direct-to-consumer stocks. Now, there's a couple of things here to point out, guys. One is that from a tradable perspective, if these stocks start to get some traction, then from a technical setup, I will take trade. But also, if the sector as a whole starts to get some love, for want of a better word, from fund managers, from mutual funds, etc., then you're ahead of the curve because you're already watching the stronger ones. You're already familiar with the stronger stocks. You're already familiar with the stuff that's struggling, so you know where to go to. So when it starts to pick up, you're already ahead of the curve. Or the other angle, of course, is that if you're a longer term investor / trader, you might pick a basket of these and stick some in a portfolio. So I've got a few of them here. Now, I'm not familiar with loads of them, and I've kind of tagged them into separate sections here. We've got the direct-to-consumer, proper direct-to-consumer. So I've got these like on a purple marker. So stuff like Chewy, which is a dog website. They're selling pet products, and they sell stuff directly to the consumer. So it's direct-to-consumer. You go on there. You order whatever you order for your dog, your basket, your bowls, etc. Order them. Fine. Super good business model, doing very, very well. Reasonably recent IPO, and I say recent last year now. Gosh, with coronavirus, it feels like times change dramatically. But anyway, the point is, guys, IPO here, they've done okay. It's one to watch. Similarly, Casper really struggled with the IPO. I remember watching this right down the coronavirus lows, thinking, is this something to tuck away, something to buy for a trade? Didn't really pull the trigger on the end of it in the end, but it's one to watch. Again, they sell mattresses direct to the consumer. This one is Freshpet. I think this is a German? No, actually, sorry. The German one is HelloFresh. Getting the fresh mixed up. So Freshpet, similar type of thing. I think this is more of a pet food kind of resource. But look at the strength of this. Now, a lot of people go, "Hey, this is overvalued," and you might say that, but actually, when you look at some of these companies, this is exactly the technical setup that you like to trade. This is one of the ones that I'll definitely be keeping my eye on for a position. If it's continue to find a bid way above the coronavirus highs before coronavirus, then that means, or that to me suggests that significant strength is there and the people are buying it aggressively. All right, next one I've got for you on this kind of purple list is HelloFresh, German company, I believe. Same kind of thing, but they are providing ingredients or vegetables, something like that, direct to consumer. That's something worth a watch, but it is on the German exchanges. Peleton, we're very familiar with this, direct to consumer, gym equipment, exercise bikes. They're now moving into treadmills, and a great business model. Of course, there's arguments about it being overvalued, but hey, it's $100. It shows no sign of stopping. Remember, we were analysing this a while ago on this pullback to fill the gap. Unfortunately, I don't still have it in the books, but it was a great trade nevertheless. The other one here, we've got SFIX, so kind of similar type of thing. From direct to consumer's perspective, people sending items off to be fixed. Now, here we get, it gets interesting, guys. Shopify and Square. Now, these are interesting plays because these are like a raw play on mattresses or a raw play on dog food or whatever you want to look at it. But Shopify and Square are actually the tools that a lot of these people need. Now, Shopify is really becoming the #1 e-commerce platform across the planet. It's easy to use. It's very, very reasonably priced. Developers are very familiar with it. The infrastructure is all there, and as more and more people come online, Shopify are able to provide this technology for relatively cheap. And then as stores start to scale up, of course, Shopify starts to make more money. A really good company to look at. Yes, it's come so far, but that's kind of testament to how well it's done. You're sitting back here at $25 and now we're up at $1,000, but it just seems so strong, keeps continuing to go. Market valuation high, but hey, we're not looking at valuations here. We're kind of looking and seeing what's got the strength. Same with Square. Now, Square is the payment processor that a lot of people use. Again, super traction, well above the pre-coronavirus highs, and from a technical perspective, a very interesting chart to look at. So those are kind of plays based on the technology as opposed to raw plays. If you've got any others, guys, that you have direct-to-consumer stocks, stick them in the comments section below, because I'm trying to build this watch list. I'll also do some research and add bits and pieces to it as I go. I've got some other ones that are kind of not quite there, but maybe similar. Like you've got Blue Apron here, we've got Front Door, which are these Purple Innovation, these ones that are Temple mattresses, Wingstop, which does some deliveries and stuff. So these are Walmart, which now starting to buy some brands which are D2C. So and these other little ones as well. So there's some other ones that are kind of part there. So you've got a choice. You either go, right, do I have a direct play on a specific company like Chewy, like Peleton, like Casper, or any of the others that is a direct play on that business doing well? Or do I have a broad play on the infrastructure like Shopify, like Square, like any others that are going to come on that are providing resources and tech for these companies? Or do you have a play based on something that's already a kind of established business model but is starting to get more into D2C, like Wingstop, maybe Walmart, any of those? Obviously there's Amazon there, but we've left that out for now. You get the idea. So you kind of got three aspects, and from a trading perspective, I'll be scanning through these through my scanner all the time anyway, just to see if they come up from a kind of screening perspective as well. But also, it's nice to keep abreast of these little sectors, especially considered newish sectors. You're not talking about utilities, not talking about consumer staples. We're talking about stuff that's when it starts, if it starts to get traction, hey guys, it could be super overvalued. Who knows? It's already some of these have come up super a large amount already. We don't know, but having these sort of segmented off also means as well, if you're prepared, and let's see something in the news like something just goes flying because of amazing earnings, you already know what else might benefit from it. You already know, hey, if Temple's flying, maybe Casper's going to fly. Maybe if Chewy's flying, maybe other dog food or pet food retailers going to fly. So it's worth looking at, guys. D2C, I think it's a new trend that's happening. And if you've got any stocks you want to add to it, please let me know in the comment section below. Take care. Bye bye.